We're joined by Hatem Dhiab. He is Managing Partner at Gerber Kawasaki Wealth and Investment Management. Great to see you. Do you think Tesla has made a mistake with these aggressive price cuts, or did they just have no choice?
Hey, Andrew. Good to be on, and great to see you too. Honestly, I think the price cuts were too aggressive and too fast with really no notice, and I think they just created a massive price war that really hurt everyone in the space. As investors, you want to have an understanding of what your margin is going to be and what price is going to be for cars or products. And I think what Tesla has done is really threw us all in a loop, and that's just created a massive uncertainty around the company's results.
One thing holding back electric vehicle sales in the United States has been a lack of models with long mileage, 300 miles or about 480 kilometers on a single charge. But Bloomberg reports that there are now dozens of these models available. Is that going to reignite growth in EVs, do you think?
Yeah, I think the range is definitely an issue. But I think more of an issue is understanding of how these cars work, right? And the fact that there is a ton of charging station or charging network around. Most people don't drive more than 25 or 30 miles a day.
Yeah.
So if you have 250 or 300 miles of range, you should be fine. I think the problem with Tesla that hasn't done is, as a leader in the space, they should have spent a lot of more in educating consumers about how these EVs work and they are viable replacement for ICE cars. And that's really what's missing in the Tesla story right now.
That's interesting. People think, well, I'm going to be driving to Miami from Arizona and I need big range. But the reality is you don't need it in 90% of driving or more.
Correct. That's exactly it.
With Tesla and Elon Musk's volatile personality, do you think there are serious concerns about governance here?
Big one. We've been very critical of what's going on with Tesla. First of all, you're a consumer products company, so having a harsh political commentary, alienating half of the country does not help. But secondly, I think with Elon's governance, I think Tesla used to be priced, or the valuation used to be based on a software company. And then when the CEO comes out and said that they want to develop their AI outside of the company, that really creates some real uncertainty around, is the CEO serious about being more innovative, especially on the AI and the software space. So I think as institutional investors, we were very spooked about those commentary.
Are you in Tesla stock now, or have you sold it all?
No, we have been involved with Tesla for a long time, and we continue to hold our stock because I think the long-term picture really hasn't changed. We still see the Tesla as a leader, and we still see them. We're still in the market going to grow quite a bit. So as a result, we still want to be involved with the company, but it's definitely been a challenging time.
I guess they do have this enormous intellectual property, and they have the chargers, which are becoming the standard, it appears, in the United States.
They have the largest charging network in the country, and it's a really massive moat when you think about it, because when you have an electric car, you have to charge, and being able to, knowing that there is a charger not very far from you is key. But also the IP, as you said, around all the data that they've been collecting for the millions of miles that have been driven with Teslas over the last 10 years or so is massively valuable, especially when you're thinking about AI and being able to create this full self-driving. The problem is really they have not been executing, and there is a lack of understanding of how effective this is going to be.
That's interesting as well. You note that a lot of Tesla cars are pretty cheap already in the United States, the lower end models.
Yeah, there is a conversation around the street right now that they're looking for a new model, a new cheaper model, but currently a Model Y or Model 3 is less than $40,000 when you factor in the US or the IRA incentives or credits. So most cars, 70% of cars that are sold are less than $55,000. So Tesla's addressable market is massive because of this 3 and Y. And frankly, the cars are very, very good. They're quite desirable. I think, again, it's really a lack of understanding from consumers and lack of education from Tesla is really what's the problem.
What about Tesla in China? Have they got a serious problem with BYD?
Yeah, that's a different story. I think China is a big market for Tesla. Almost 25% of sales are there. But BYD makes really, really good cars, and they're very, very cheap. So I think there is definitely a pricing issue. Tesla is definitely the premium manufacturer model there. And then we've all seen the stories around China slowing down and the problem economically there. So I think you have two problems there. You have, price problems and the economy slowing down meaningfully.